with the quarter now in the book. The next test for the market will be earnings. And one big question is what impact, if any, the Brexit will have on the earnings of U.S. companies. Bob Pisani has more.
We don't know if the Brexit will have a long-term impact on the economy, the global economy in particular, like China's currency devaluation in August, remember that? Or like the big drop in oil prices earlier this year. But the worry is that it may torpedo any chance of a return to positive earnings growth for the S&P 500 for the year. You know, we've already had 5 straight quarters of negative earnings growth for U.S. stocks. You could call it an earnings recession. And although the street was expecting earnings to turn positive in the third and fourth quarters of this year, this Brexit thing could throw a monkey wrench into all those calculations. There's 2 problems. First, there's the threat of a stronger dollar. That's really bad news for material stocks, for energy stocks, and technology stocks. They all do a lot of business overseas. Second, there's this whole issue of lower rates for longer. You've heard that phrase before. That's really bad news for big banks. The banks were expected to have higher earnings later this year, partly on higher rates and partly on an improving global economy. This Brexit makes that more unlikely. The markets have been rising in the last few days as some have been speculating on the impact on the U.S. and that the impact from the Brexit would be limited. But once earnings season starts in a couple weeks, you'll certainly hear more about the macro fallout from this Brexit. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.